I'd like to welcome everybody to today's Friday call, April 8th, and we have our guest speaker, James Colomb with U.S. Treasury. And what we, visiting with James a little bit over the last few days, and then prior to you getting on here, what we've decided to do today is really have more of a introduction and maybe updates from James to start our event today, and then really have it be an open roundtable discussion to where you can ask questions that you may have that pertain to your specific project, or ask questions in general that maybe there's some confusion about. But I have to give kudos to Treasury for the amount of technical assistance they've provided CDFIs and tribal nations on this, the SSBCI. It's above and beyond the call. So I thank you, James, for all the time you guys have spent on that. But if you want to give just a, I guess, a brief update of what's happening, and we can go from there.
Sure. Day to day, we're still doing lots of one-on-one calls with tribes and partners like CDFI as they're working towards the May 11 deadline. But I'm sure top of mind for a lot of people is the proposed rescission in Congress. And sad to say, we don't have much updates on that either. I didn't know it was coming, and it's not a final law yet, right? It could change, it could not go forward. So we don't really have anything we can really react to at Treasury. We're monitoring that closely, but that's pretty much all we have. We're sort of in the same boat as you, waiting to see what actually happens in Congress. Another thing that's been a question that I wanted to clarify is whether or not you can do relending with a CDFI and how. And there's a couple ways to go about it, but one of the options is, in fact, to do formally, a loan from the program without upfront match. And then you can do one-to-one capital match at the transaction level from the CDFI after that initial loan. It would still require transaction level reporting, and the subsequent relending would still need to be SFBCI compliant. That's something people have asked a lot about, that we have additional clarity on now. Then I would just make a quick plug. We've got office hours every Thursday for everybody. We've got regional office hours for the Pacific Northwest, East Coast, and Alaska at different times, and are more than happy to go answer questions by email or have one-on-one meetings. But with that, I'll just be great to open it up to quick questions anybody has.
Okay. Does anyone have a question that need to, you don't need to raise your hand. Let's just have it be just really an informal roundtable discussion to where you can just jump in and ask James the question. So does anyone have a question that wants to come forward here? I always have questions, James, so I'm going to shoot one to you here and give everybody maybe a minute to think. But I know one of the questions that was asked to me yesterday is on the 10-to-1 match, or 10-to-1 ratio there. What happens at the end of the period if you do not reach your 10-to-1? I mean, what compliance issues would either organization run into if it isn't met?
So I want to emphasize the 10-to-1 is a forecasted expectation in the application. A number of states in 1.0 did not meet the 10-to-1. And I think, it wasn't really an ongoing compliance matter, partly because we can't predict the future, right? The goal is to design a program that has a catalytic impact on small business credit ecosystems. But, similar like the COVID pandemic, right? If there's some kind of natural disaster or another epidemic, that could severely impact the ability to re-leverage, right, and get to 10-to-1. And so the goal of 10-to-1 is to make a reasonable expectation of getting there in the application. But again, lots of states did not make it to 10-to-1 in practice. They might get there later over time, but that was not an ongoing sort of compliance question.
And the other question I think that I get asked a lot in regards to the the program itself is, what do you see? I mean, what does Treasury see as the best fit for a native CDFI to get involved? Is there a simplistic way? And I know you have been in touch with Treasury in regards to native CDFIs. You know, there's some compliance issues that have to be considered. One of them being each native CDFI has geographic restrictions that we can lend within. And then we also have restrictions when it comes to defaults or delinquency rates. Have you, has the CDFI Fund waived any of the compliance issues for native CDFIs? Do you know of?
No updates from the CDFI Fund, but I do agree that it's them that we have to go to figure some of this stuff out. I think one alternative you could consider to do lending outside of your target geography, if that continues to be an issue, is try to find other lending partners in the surrounding area. And so, I think the easiest way is probably to go about it, or for CDFI, would be, you know, and happy to hear any pushback that doesn't make sense, right? It's only what makes sense is what makes sense to you. Is do a loan participation program where you're administering the program, and the program could either commit funds up front for loans that you'll underwrite, or make a deposit with an agreement that you'll be using that deposit to make eligible SSBCI transactions, or the sort of relending version where there's either a loan with private capital from the SSBCI program up front that you can then go on to do SSBCI eligible transactions after that, or do an upfront loan from the program that has subsequent private capital match. I think that looks the most like day-to-day CDFI activities, but happy to hear from the audience if those options don't make any sense. Sort of finding external lenders to get outside of your geography, or these two models of either loan participation or kind of a close cousin of loan participation, where the program just makes a loan to the CDFI for relending. I talked to a tribe this morning whose plan is to take the entire SSBCI allocation, loan it at 0% to a CDFI. The CDFI will be sort of an administrator and lender. They'll be using some of their own private capital, as well as private capital from a couple of lenders in their area. And then at the end of the program, the tribe is going to leave the money in that lending program because they're happy with it. I will emphasize, you know, I know a lot of CDFIs at the end of the program want to get the money, but that ultimately that's between you and the tribe, right? I don't know that every tribe is going to be comfortable with something like that up front. And it's not really for Treasury to say what the right thing to do is there, right? That's between the program and the contracted entity, or the CDFI, AKA the CDFI.
And you know, another thing
Very
that
long answer. Did I answer the question?
Yeah, you did. Another I guess concept that I heard yesterday was, let's say in year seven you make a loan, and that loan doesn't mature until after the program. Would that count as portion of your 10-to-1? Let's say it matures, you do a loan in year 8, and you do a 5-year loan, it goes past the 10 years.
I think that's fine. I think that does count for the leverage once it's deployed, but where it wouldn't count is you're probably not going to be able to re-revolve any interest in much of the interest and principal you get back on that loan, if that makes sense.
Okay. And I don't want to hog all the questions, so if any of our participants on the line want to jump in, feel free to jump in as we speak here. Another question, okay, I'll shoot another question out that I had for you, would be if as we get into these agreements, it's been told to me that at any time the tribe can opt out, or the CDFI can say, I don't want any, you know, I want out of the agreement. What is the Treasury stance on that?
You know, I think Treasury would have concerns if that resulted in a program that didn't make sense anymore. You know, so if you have a substantial, if your allocation agreement depends on the relationship with the CDFI, and then the tribe tries to back out into something that doesn't have sort of controls and experience and lending, maybe that would be an issue. The other thing is, if you've already deployed the capital, I don't know that you can't just like take all the loans back and exit the program, right? And so I think the concern we have is that it could be kind of messy. I think you'd want to have something pretty clearly laid out how that could go. I mean, if you have really strong concerns about not getting along with each other in 5 years, maybe that's just a reason not to work together. But I think it probably certainly would be cleaner not to do that. And if you want to have an exit plan, it'd be nice to have something very clear. Like we've talked to some groups that are thinking, hey, we're going to start with one CDFI, but we're also trying to start our own tribally owned native CDFI. And you know, that could be a smooth transition, right? If you sort of transfer program administration and lending activity to a different entity. But I think happy to dig into that more if I can be more clear, or I see Philomena has a question. And then we also have some questions in the chat. Sorry.
Okay.
So high level, I'll just ask this chat question here. Answer that. So what's going on with contracted entities? High level, the implementing entity is a part of the government. Contracted entity is pretty much what a CDFI would be in SSBCI. So some of the states, their implementing entity is the State Department of Commerce. Some of them is just like, I saw one is like, you know, the governor's chief of staff. So the implementing entity could just be the tribal council or the tribal president's office, whatever they want. Contracted entity is, this is a very high level question. I'll ask a follow up here for the question in the chat, but contract entity is basically you. And I think what they're looking for is all the stuff they ask about, sort of loan experience and capacity to handle additional lending volume through participation in the program, proper controls. Can I, any elaboration, Jeff, that I could help out here with?
No, I think that's a good start. That's kind of what I wanted to get a confirmation of. You're really just describing your day-to-day working knowledge on how to run a loan program, right?
That's exactly right. Yeah. And so for a CDFI, you're describing what are your practices for loans and controls. Go ahead.
So let's take that control thing one step further. So if the tribe is the implementing entity and they decide to farm out all operating issues and to a contracted entity, for example, their neighborhood native CDFI. What's the check and balance on the control side that you saw in best practices for version 1.0, like for decision making and stuff like that? What was this in 1.0? Was the state totally passive, and that was an okay, acceptable arrangement? But the implementing entity still has to report. And how did that work when you saw the whole kit and caboodle contracted out to a third party by a state? What were the check and balances to protect the implementing entity, that good loans were being made, they were being documented? What did you guys see there, so we can anticipate that?
I think it's a bit of a spectrum, but I think in some cases, like I said, they made deposits under an agreement that they would be doing client loans. That's one option. Another option is they have an agreement where the money, like in Georgia, where the money is committed for these loans, but they still came back to the implementing entity, the state office, for sort of like a compliance checklist.
Mm-hmm.
And so I think it's a spectrum of options, and it's sort of what the tribe is comfortable with. If the implementing entity has concerns, they can have more of a hand in that, where they are more thorough by transaction and compliance. If they really trust the contracted entity, they can do a more hands-off approach. I don't mean to avoid the question. Is that unhelpful?
No, that makes sense. It really depends on the trust level and the relationship level to allow that.
I think that's maybe one of the more confusing parts of SSBCI is so much of it, a lot of these relationships, right? I mean, it's all about the relationship, right? You don't want to use a contracting entity you don't trust because it's sort of between you and them.
A different question, as long as I got you, Jim. So as you are having touch bases with different applicants, are you finding that people are gravitating to the loan participation model as more so than the others, like venture capital and loan guarantee and collateral support? What are you seeing there? Like if you had 10 conversations, are 8 of them talking about loan participations and 2 of them have a little more ambitious programs?
You mean among tribal applicants?
Yes.
We've only got 2 tribal applications in so far, but conversation-wise, I think that's pretty much right. Most of it's loan participation. That being said, a good portion of tribes are also looking at venture capital. So we have several joint applications or multi-tribal VC operations that are also forming in different parts of the country. For the most part, though, everyone else is thinking about loan participation or maybe some collateral support.
Okay.
I don't think I've talked to even one tribe that's going to do the cap, which I think makes sense. I think cap requires more scale, especially than is available in a rural reservation.
So James, next up, we have a question from Philomena.
Yeah, sorry, Philomena.
Oh, no problem. I appreciate Jeff's questions. Just to follow up on that one, what I'm looking at the Minnesota example, where Minnesota contracted with entities to carry out a lot of their program activities, and they did so through a pretty comprehensive agreement. So it was a loan that was made to the entities through this loan agreement that set forth all the obligations that the lender has to fulfill, its duties back to Minnesota pursuant to Minnesota's relationship with Treasury. And I feel like that's really a clean way to do things because, just with our tribal procurement process here, it doesn't go at the speed of business in terms of being able to make transactions happen quickly after a business has come to terms with, whatever loan that they're going to be doing. And so, I have that. I was able to get that document from Minnesota. They were really kind to dig all that stuff up for me, and I'm happy to share it with anybody. One of the issues, I hope you understand that one of the real feasibility issues that we're running into with this program is it's just our allocation isn't really it's small, and that means that making this whole thing work is really tricky, especially in order to create that 10-to-1 match. So what I'm working on is a model that is like we're going to have a small revolving loan fund because we have a lot of really small undercapitalized businesses that have sprung up on the reservation, especially following COVID. It's going to be a trick to be able to find a lender that will work with us on this because, both on the tribal side and the lender side, we're probably going to have to be funded separately in order to do the work. So the only way that we can make SSBCI work is if we get other outside funding for small business technical assistance, because that's how we'll be able to staff position or positions that we need to follow through with all the compliance administration, and then the marketing that has to happen within our tribal community to get people to know what this program is and start participating in this program. Because, you know, my community is all about relationships, and like they're not gonna like our folks aren't gonna get interested in stuff unless we have somebody on the ground that's talking through them about these issues. A lot of the reason, some of the reason that we're so undercapitalized is because there's just not a level of education, instruction about financing itself. And so that's sort of a beginning point to even get this program successful. So I'm very concerned about what's going on in Congress with respect to the TA funds. And I'm also concerned that we still have no idea what the TA funds are going to look like. So I'm scrambling to try and find other other funding mechanisms in order to make this work, because I feel like this could be a real game changer. Like this SSBCI could be incredibly helpful for kind of leveling up with our tribal small businesses. So I'd like somebody from Treasury to address the congressional issue. I have another specific question with respect to tranching. So what I've been studying the guidelines with a bunch of folks, and I understand that we have to expend 80%, obligate whatever within 3 years. But if we expend it sooner than that 3-year period, will that next tranche come, or would we have to wait for the entire 3 years? And this question is really, this question also goes back to the feasibility, because if we can compress that time period, then we can also go after some of those admin funds, like the 5%, 3%, 3%, in order to again make the finances work. So that, that's another question. And finally, my last question is about the SETI goals for the tribe. I noticed that the SETI goals are 100% for the tribe. And, one of the conceptual models that I'm looking at is providing access to contractors that are working on the reservation, doing infrastructure projects, regardless of whether they're native or non-native. And in reading, the SETI definitions, and then thinking through the kind of contractors that come on our reservation to do all kinds of different technical things, they're not all SETI. And so, is this SETI goal, does it prohibit tribes from working with non-SETI borrowers, or is it just like a goal? Like we're trying to do that. So those are my questions. I can go back and go through them again one by one if you'd like, but if you've written them down, I'll just listen.
I'll answer what I wrote down, and if I miss
Okay.
anything, let me know. On the congressional thing, we really don't have much else to say because we don't know much more than you guys do. I mean, it's not a final law yet. It could change. It could not pass. So, I mean, the states have as many questions as native CDFIs do and tribal governments do. We're sort of waiting. I mean, I think my understanding is that they don't vote on it today. They won't get back to it until after recess. So it could be some news today. Could be some news in 2 weeks. But I mean, even the proposal, right, is not to totally destroy SSBCI. That being said, immediately the first concern we have, right, is tribes near the minimum allocation, right? It goes from too small to less than that. So appreciate your concerns, and it's something we're sort of reeling from as well. You had a question about the tranching. So the 3-year thing, it's not saying you have to wait until 3 years. We're saying that if you don't draw it down within 3 years, Treasury may pull back the rest of the money. So you don't have to wait for 3 years. And in general, we would love to work with tribes on strategies to get those tranches out faster. If you have any ideas, we'd love to talk through it, because totally understand, right? It's one thing to do a loan program of $600,000. It's another thing to do it with a third of that. So we're happy to think through strategies of how to draw down that money as quickly as possible. Did that answer the question on the tranching? And then for the SETI goals, so I hate to give this answer with ESSA, but it's common in SSBCI. It depends, and so I think we'd have to, if we could talk about it in writing, like or in a follow-up conversation, exactly where these contractors are and what those transactions would look like, to get a better sense of whether or not they're SETI. Because SETI, you know, it has some rural dimensions, right? There's a lot of dimensions where those sound like those could be SETI, but that's why I say it just depends on specifically the transaction.
So and in terms of the, you know, the tribal programs, they have to be 100% SETI borrowers.
The SETI incentive goal is 100%, and then that incentive goal,
oh, okay, and so that's the extra bump.
That's it's for the formula for getting your SETI incentive funds.
Okay, that's helpful.
And then the other thing to say is, I think, you know, SETI is rather inclusive, and so depending on where these contractors are coming from, who they might also be SETI too.
So thank you for that, James. We have a question from Lakeisha Mead in the chat. It asks, can the tribe gift the funds in the front end to a CDFI, or does it have to be in the form of a loan?
It doesn't have to be a loan. There's a couple of ways to do this, and cut me off if I've said all this already. You could say, okay, the tribe is going to hang on to the money, but it's going to be fully committed to the CDFI for loan participation or some other purpose. You could do a loan like we talked about to the CDFI at 0% interest, potentially, where the CDFI is then doing re-lending that is compliant with the statute and the guidelines. Or going back to the first option of loan participation, the tribe could make a deposit with the CDFI with an agreement that they will be using that for SSBCI eligible transactions, including the one-to-one capital match. And so it depends on what you have in mind from a gift, but there's a number of ways for the money to get to the CDFI up front or be committed to the CDFI. Did that answer your question, Lakeisha?
Yes, it did. Thank you.
Great.
Do we have any other questions anyone wants to jump in and ask James while we have his attention here? James, I'm gonna.
Yeah, and happy to talk through proposals too. I think this is a great venue to discuss. I think people, if you just want to talk about your program generally, probably that would be helpful for other people. I'm sorry, I don't mean to hijack Pete's meeting.
You're fine. No, I think that'd be good if anyone has any questions about their proposal, because I think that's what we need, is a dialogue. On next Wednesday, Pilar Thomas is going to introduce 2 different models in a template form. So be sure to mark that on your calendar. And then next Friday, we will not have a webinar just due to Good Friday. So we moved it to Wednesday. But if anyone has any questions about their specific model, please raise your hand and jump in, because it'll only help others that are on the call. Jeff has a question here.
Yeah, so I just want to share that I've had a lot of interactions with Jim and his colleagues at Treasury. I'm working on 2 projects. They've been very responsible. The key is these one-on-one meetings. My God, you can cover a lot of ground in 30 minutes, and it's tailored to your program. And I think if you reach out to them and request that one-on-one time, they'll book you as soon as they can. And I tell you what, we had several stopping points where we were just like stuck. And it's like, hey, we got to reach out and get some help. And I wouldn't be at where we are in our knowledge level, and we still don't know everything. There's still questions on this. This is so new to everybody in Indian country, but we wouldn't be where we are today knowledge level unless, without the one-on-ones, because I tried reaching out to the Treasury SSBCI information email, and, when Jim came on board a month or so ago, that created the link. So guys, everybody on the call, take advantage of that, because that's how you're going to progress in your knowledge.
I appreciate the kind words, Jeff. And I would say, yes, that's absolutely what we're here to do. I would say, if anything, we were taking a lot of calls. We've got room for more. We did this with the states too, right? The states had their deadline on February 11th. There were Treasury staff on the line that night until midnight, right? So we're here to help. We want everyone to succeed. Something you've all probably heard me say before is these aren't pass-fail applications. We're hoping to get everyone across the finish line. We're happy to help you as much as we can now to get them in as good possible shape. And then once those applications come in, we'll be going back and forth with additional questions. It's not just, I hope nobody ever feels too frustrated by how confusing the program can be, because the states are confused as well, right? And some of the state applications are, requiring significant back and forth. And so we want everyone to, if you want to participate, to get in by the May 11th deadline. And as Jeff was saying, we're happy to go over the leverage tables with you one-on-one, ask about different parts of the application, and that's all on top of the webinars and office hours we have scheduled.
So,
Yeah,
James,
so I can testify to that. Last Friday, I had a call with Jim and his colleagues specifically on leverage tables. Are we comprehending this right? Are we filling our data in the correct spots? And then the resulting math. Does this make sense? So you take advantage of that. So, hey, this is a question kind of out of what Philomena was talking about. Philomena, do you think there's, you have a more local application? Is there interest in a pooled application with 4 or 5 of your friends? And you could take that package to, like, for example, somebody at the state of Wisconsin, Wisconsin Economic Development Corporation, and say, I need a funding source to pay for the delivery of these loans.
Yeah, for sure. And I am happy to see Redcliffe on. And if there's ways that we can work out some of the feasibility, and that the scale issues are just really challenging.
Yeah. So everybody's setting up these little mini funds, right, to service our neighborhoods. And
yeah.
So they're valuable resources, but there's a high cost to administer, and there's very little money in the budgets. What's really crazy, and this is kind of like a soapbox comment, in me working at a bank for 2 years, we've responded to our small business borrowers and provided them PPP loans. That was $669 billion. Billions. We had loan committee today at the bank, and one of our restaurant customers, one little restaurant, mom and pop diner, got $680,000 of grant money and $150,000 EIDL loan, $800,000 of help from the government. And we are screwing around with a $500,000 pot of money here with all kinds of crazy ass rules. The plumbing was there for 1.0, so Treasury and the government and all the high powers that be selected this as the plumbing to use to deliver more. When you wait 2 and 5 and 8 years from now, how much fraud is uncovered and that's $669 billion. It's the old story of buying $800 hammers. And so we have all these rules and fences and obligations in a 10-year period when my restaurant customer, thank God he got help because he might be out of business, okay? But he got $800,000 of help with no questions asked. They couldn't get him the money fast enough. And here we're screwing around with, well, according to this statute, it's got to do this. And, so we're not going to shoot the messenger. Jim is helping us interpret this highly complex set of rules down to a one-person economic development office in a tribe. It's problematic. It was a bad idea to select this plumbing method to run the water through. And so now we can't, right, the horse is out of the barn, so now we got to work with it. But this is my commentary from seeing other programs that were effective, had less rules, no hurdles, no questions asked. How can I get you the money? And we're screwing around with this $500 million bone that's being thrown to tribal communities. And we're trying to figure out this complex thing with a deadline on our back and wondering, do I have it right? That's just to file a complete application. The scary thing is what happens when we get the first tranche of money and how are we really going to make it work? So, man, if I had a microphone and I could be in front of these guys in Congress, I'd tell them, you got to unwind this shit and put it in a different container, put it in a different wrapper. If you really want to help. This was a bad idea. No offense to Treasury. Treasury is the vehicle to deliver it. Okay.
I was going to say my top line thing there is you can't hurt our feelings, right? I'm here. I'm here to help tribes as much as I can, right? And I really don't know that I disagree with anything Jeff said. I feel conscious saying that in a recorded call, but it's, we're not here to pull the wool over everybody's eyes, right? The rules are incredibly complicated. I mean, to add to what Jeff is saying, right? The state of California got $1 billion in SSBCI. So think about their admin cap, right? It's just, as Jeff was saying, kind of is what it is right now.
You can justify adding staff when you get $1 billion and your first tranche is $333 million. The state has got people, they got a back room full of MBAs ready to say, I know what to do with that. And our tribes do not have that bench strength. They got smart people, but there's one, versus the state of California. You know what I mean, Jim? It's like the numbers are so different at that level where they got like a whole department that can make this thing hum.
And that's exactly how the program was designed. It had those state offices, but you said it's got a back room full of people in mind. It was meant to help those guys after the 2008 financial crisis, and was sort of just a copy paste into ARPA. I do want to answer Philomena's question in the chat, the difference between collateral support and loan guarantee, and then this is a great discussion. I'm happy to sort of have a sober conversation with SSBCI here. So collateral support is you're making a deposit to cover collateral. Loan guarantee is you're guaranteeing part of the loan. I think one of the tough things with loan guarantee is you have to have a lender who has confidence in the program. So if you've got a lender who's comfortable with SSBCI loans at scale, like in California, they'll accept covering that, it could be whatever guarantee with less than sort of full deposit set aside because they've got a large portfolio that they're comfortable with the loss rates on. And so I think a loan guarantee could be tough for the leverage ratios for tribes. And then the actual difference again between the programs is just a deposit for collateral support versus guaranteeing a portion of the loan that can be no more than 80%, because then we wouldn't have 20% capital at risk.
So James, there's also a question from Nicole. Does the supplemental appropriation proposal provide an opportunity to streamline and clarify the requirements?
I think it's a fantastic question that I was sort of asking myself yesterday. But I don't know. I don't know what exactly is going to happen. I mean, I think there's other things that are on the table in that proposed rescission, right? And I think tribes are going to be mobilizing to think about what their priorities are. And that's partly why Treasury doesn't really have much to say of substance, because we don't know what the final deal is going to look like, right? Maybe all the states are going to be up in arms and say, don't cut SSBCI, and there won't be any SSBCI cuts. Maybe some, I can't predict exactly how it's going to shake out, but I think, the CDFA is sort of this big national non-native CDFI entity, right? And they're advocating pretty strongly for different things here. I would say it's probably you always have the opportunity to advocate for different outcomes, and but I'm not sure exactly how it's gonna pan out or what kind of things are being considered.
We also have Andy Gordon with a question. Andy?
While Andy is getting off mute, I was just going to say one more thing in response to what Jeff was saying. I think you got to do sort of a cost-benefit analysis, I suppose, about SSBCI. I mean, my goal again is we've got this money set aside for tribes. We want to get it out if we can. If you're really at a point, if the tribe is really at a point where there's no other option than to just sort of jump it into a joint application, then because at the end of the program, if you use your money once, the tribe can get the money, right? And so I don't want tribes to be forced to leave money on the table. But I think we all heard what Jeff had to say. Andy, you're off mute now.
Yes, thank you, James. I love the way you're so forthcoming about everything and open to all the questions. I just had a question. Are you coming across any tribal governments in search of a lender partner? Because as you know, NCN is working on a template for native CDFAs to be responsive to tribal governments as they're putting a package together. And I was just wondering, is there any kind of matchmaking on that side, or that's not an issue?
It's a huge issue, and we have not yet had a matchmaking event. We'd be happy to support one, or maybe even host one ourselves. I'm not sure. We might get into legal trouble there because we can't endorse providers, right? But is it a problem? Yes. It's a mix, right? We talked to some of the tribes with large allocations. It's been referred to their Department of Commerce and Economic Development, and they're moving forward with various proposals. Other tribes, are just saying, we tell them you get a partner with a private lender, and they're saying, well, what lenders? What are you talking about? Right. Especially, consider, a lot of the eligible entities are Alaska Native villages, right? And between them and rural tribes, I would say, yes, there are a lot of tribes looking for lenders. On the other side of it, large national banks did not participate a whole lot, as I understand it, in SSBCI 1.0. And so you're left to, again, deal with sort of the local offerings. And back to what Andy was saying, are tribes looking for lender partners? Yes, many of them are.
Maybe that's, Pete, maybe that's something NCN should be looking into. I know we're having our session next Wednesday about potential templates, hopefully that are satisfactory to Treasury, that native CDFIs can be responsive to their respective tribal government.
James, would that be something that you would be allowed to maybe help NCN facilitate as a matchmaking event? Not necessarily endorse anyone, but just use your resources to match up with our resources so that we could host something of that nature?
I hate to give a lame answer, but I'm not sure. I think it's a great idea, but I'll circle back and see what is what's feasible about sort of who's hosting and what have you.
Okay. And the and especially what Jeff said there just echoes a lot of what some of the native CDFIs that I speak to echo, and I don't want to beat a dead horse, but there's just lower hanging fruit, easier money out there to get. And so that's really what I've been hearing. And we have been in contact with Zachariah and Jody Harris, and I think there's some flexibility in regards to the compliance issues that native CDFIs may run into. And it's just a matter of reaching out to the CDFI fund and asking those questions directly, because I think they're going to look at them on a case-by-case basis.
Yeah, well, I think we've been having a few conversations with CDFI Fund. I think it'd be good to align as well as possible. Again, our compliance guidance is not out yet, but I know a lot of CDFIs have asked if we can somehow get around transaction level reporting and whether or not we can get around sort of SSBCI purposes when we get to relending. And I think, both of those are in the statute. I don't think we can get around either transaction level reporting or relending for other purposes like home mortgages or anything like that. It needs to be SSBCI eligible.
And the just throwing this out, food for thought. I visited with Andy a little bit about it, but it would be nice. I know the horse is out of the barn, but it would be nice moving forward because you never know what next year is going to bring. But when it comes to audits, for example, there's one audit that is done. A single audit, the purpose of a single audit is that it fulfilled the requirements of an audit for several federal agencies. So, nonprofits, you get a single audit and it fulfills all the requirements. It would be nice in the future if when you're at the talking table with your counterparts there, James, if they could come up with a single reporting mechanism that could have been aligned with maybe the CDFI fund, but just so that there's just one report that we're all used to reporting on, then I don't think this would have been as huge of a hurdle for a lot of smaller native CDFIs that have smaller capacity.
I think that sounds like a great idea. And I will just say in general, any reporting issues, let us know. There's only so much we can say until we get the guidance out, but I have a fantastic colleague named Jennifer Parisian, who's a Turtle Mountain Band Chippewa Indians, who is our sort of tribal compliance point. She's focused, unsurprisingly, more on state and local fiscal recovery fund and some of the bigger pots of money. But happy to have any follow-up conversations if we can get some good ideas for streamlined reporting, pending, of course, our compliance guidance.
And this, I'll just throw this out for food for thought, but with a lot of the smaller tribes, smaller CDFIs, when it comes to technical assistance, myself, I run a native CDFI, and I know there's loans that come through the door that require a lot more hand holding. And then there are loans that come through the door that may be more mainstream. And I think some of the smaller tribes, some of the smaller native CDFIs may get a few more of those that require a lot of hand holding. And, one thought is possibly developing a technical assistance provider that would be able to provide technical assistance via Zoom or different learning platforms to assist the smaller tribes and help them with the shortfalls of the administrative fees, because I think the administrative fees will prohibit maybe some of the technical assistance that is going to be required. But has Treasury thought about, or has anyone on the call thought about maybe pooling our resources to come up with a technical assistance provider that could be universal throughout Indian country? And
I want to jump in for a couple things here. One is, our dream has been to have national providers for this because we knew going in the number of tribes that were going to need a lot of help, totally understandably. I will say that another thing I probably said before, but I want to emphasize again, the kind of TA we're providing on the applications will continue once after the application is approved. So once you submit the application, it goes over to the review committee process, and it'll be sort of a back and forth. It will ask you questions and sort of work your application through the subject matter expert review process. But once you're up and running a program, the states regularly would come to Treasury and say, hey, is this going to be compliant? So there'll be Treasury outreach staff once the program is going for those kind of questions as well. But and again, to say, I love the idea of sort of national TA providers, especially because, the TA grants money is going to be split amongst all the tribes. And so you might just have, I don't know, less than $50,000 in TA money for the program. So having a centralized provider that can deliver that efficiently sounds like a good idea to me.
And you know, the thing that we've thought about at NCN here is we have 9 regions so that we could be the national hub, but then facilitate it out to our 9 regions, because each region has geographic challenges and maybe broadband challenges. So we'll follow up on that and send it out to the membership and just see what the thoughts are about doing a national and then breaking it down by regions. I don't see any other questions. Does anyone have a burning desire to ask a question before we let James go?
We'll just say I appreciated all your time. Thanks for having us, Philomena, Jeff, and Nicole. Everyone had some great questions today. Great to see Dave on camera. You got a question, Dave?
No, you know me. I just always like to say howdy to my Nez Perce cousin.
Much appreciated. Oh man, it's been since before COVID. I made it out to like Kamiah and Wallowa. You're reminding me.
Wow, all right.
22 plan, maybe.
Dave, I heard you had some weather up there in the Northwest. Snowed in the passes.
Just the mountain passes, but boy, it howled the wind on us like crazy.
Well, if we don't have any other burning questions, we can be sure to tune in on Wednesday. We moved our webinar from Friday to Wednesday just for Good Friday, and I know a lot of people will be taking off early for the holidays. But we're going to have Pilar Thomas on there, and then we are also working with NorCal, which is a California-based statewide native CDFI, and we are going to have them on the call as well. This is a really never-ending project. So if we send out too many emails, let us know, but we like to keep everybody informed. And I know it seems like we're sending out a lot, but things change so quickly, and we have partners that step up that want to be part of the conversation, and NorCal has stepped up, so they'll be part of the conversation on Wednesday as well. And if anyone else has any questions or wants to be part of the discussion to do the matchmaking event, let me know, and we'll reach out to James and see if we can get some support to bring, you know, the tribes that need partners to the table. And I truly appreciate Jeff's Bowman, your comments today, because I agree 100% with you, but we've kind of, yeah. You said sometimes what I would like to say, and sometimes I'm too diplomatic. So I appreciate that.
So I'll just add one thing here. What I'd be willing to do, Pete, if you want to organize a call, like maybe next week, a separate one, without sharing like anything confidential, I can shape out what I've learned so far when it comes to like leverage tables, like the narratives. Everybody's going to write their own narrative. That's your story. So you're writing your story regarding your neighborhood and the impact you're going to make. But, you know, they're doing a bunch of math scenarios. I gravitated to a loan participation program, and I could share, if we wanted to put up, you know, like a hour call to just share how I arrived at that conclusion that would work best for us. It's still, you know, it's still being developed, some more kind of some fine details to it, but it's the best that I could come up with the framework that's allowed. The statute allows this. These are the requirements. So it's not like getting a CDFI NACA grant that you custom wrote for FA, and I'm going to deploy the loans in these manners, in these sizes, in these loan terms. Well, this is a little bit like that, but you have to use the Treasury framework. I'll tell you this, I know nothing about venture capital. I didn't spend any time on it, you know, but if you want to learn more about a little bit of loan participation. The concept that I came up with, Pete, if you wanted to put something together, you can email me. And even if it's 30 or 60 minutes, it might get people, it just stimulate your thoughts, right?
Yeah.
Because and I've had good conversations with Jim and his colleagues at Treasury that I'm not speaking for them, but the feedback is you're on the right track. These are some good thoughts, and encourage me to keep running with that, kind of model. So maybe if we did something next week sooner rather than later, it would help confirm, yeah, I got some really good ideas, or it might, even if 1 or 2 or 3 people got something out of it. And then the other reason I'm doing this, not that I have the time to do this, but just in the name of the friendship of all the people in this group here, when I had my touch base with our shareholder, the Oneida Nation, who's asking me, this is on my desk, okay? When mom and dad come to me and say, hey, we want you to work on this project, I work on this project. And so one of the feedback that I got from them was, Jeff, it'd be nice if you could kind of share some of this without letting out any confidences and, confidential details. We think it'd be good if you could share some of this. So I'm willing. So Pete, if you and I want to exchange emails and we try to come up with something middle of next week and we just put it out there, and even if 5 people show up on the call, maybe it helps 5 people.
Yeah. Would you be willing, we have that Wednesday call and we're going to segmentize it to where maybe Pilar makes a presentation and then the second half of it will feature you?
Yeah. So Wednesday, what time is that?
2 p.m. Eastern time.
Yeah. Okay. So I got 2 p.m. Eastern. Oh, so that's, hold on a second. Oh yeah, I got it on my calendar.
Okay.
Yeah. So,
Okay.
yeah. Yeah. So
Yeah.
if you want to dedicate some time after Pilar, I could share some stuff and we could do
Okay.
screen sharing, and I could show kind of some detail of how we think the math can work.
Okay. No, that'd be perfect. And I'll shoot you an email after we're finished here and just have you send me over just some bullet points and we'll just add that to our announcement.
Yep.
Okay.
Sounds good.
Okay. Appreciate it. All right.
Thanks so much, everybody.
Thank you. And we'll hold everybody to 1:59 was perfect, Jim.
Have a great weekend,
All
everybody.
right. Thank you.
Pete.
See you.